Tesla has been a top automaker for a long time, and investors want to know how much they may profit from their investment. A stock's potential future value can be influenced by a few market factors, though this is never guaranteed. Welcome back to Everything Tesla Facts, everyone. One could argue that Tesla is a unique business. The electric vehicle manufacturer has had remarkable expansion in recent years and continues to achieve remarkable success. The company's stock has been at the top of the charts several times in recent months, and there is still a lot of work to be done, which could lead to a sharp increase in the stock's price soon. Investors and analysts in Tesla stock have set a number of price goals for the company over the past few years, the majority of which have been bullish. Additionally, a lot of investors have rated Tesla stock as a good investment, and some of these analysts think that investors will see significant returns on their investment in the years to come. So, how much will Tesla be worth in 2026 based on its historical success, present growth potential, and future prospects? We'll soon find out, though. But before we get started, remember to hit the subscribe button, like, and ring the bell to stay informed about what Tesla is doing. Both positive and pessimistic price forecasts have been made for Tesla stock in the past. But, like any stock, the company's present and future market potential, as well as, to a considerable extent, its historical performance will greatly influence how much the stock will rise or fall. Generally speaking, a company's historical performance is the best indicator of its predicted market performance, and Tesla has been performing admirably in that area. In the first quarter of this year, the EV company's sales was $18.8 billion, approximately 42% more than the first quarter of the previous year. Tesla managed to set a new production record in comparison to its rivals, despite the fact that its revenue fell to $16.9 billion in the second quarter of the year owing to issues with its car delivery production processes. Despite the growing competition in the EV market, Tesla's car deliveries rose by over 81% in 2021. Expecting more from the EV manufacturer is therefore inevitable. After learning a little bit about Tesla's past accomplishments, let's examine the company's stock and its potential value over the next 4 years. Let's examine Tesla's performance over the last 4 years to determine its future value. Tesla's car deliveries increased by an average of 69% between 2016 and 2021. Good. Let's say that in 2026, this drops to roughly a 50% growth rate. It's highly improbable, but given that it produced 936,000 cars in 2021 and 1,404,000 in 2022, Tesla might be able to create roughly 1,107,750 cars that year. When this figure is multiplied by the average price of a Tesla vehicle, which is approximately $50,000, Tesla will generate a staggering $355,387,500,000 in income in 2026. Even while the average price of a Tesla vehicle is currently a little more than the amount utilized here, we hope that inflation will drop, and Tesla will be able to lower the price of these vehicles. With a 20% operating margin, Tesla's operating profits may reach $71 billion. When the sum is divided by the total number of outstanding shares, 1.4 billion, the value of Tesla's earnings per share comes to about $71. When this video was shot, Tesla's forward PE ratio was 46.08, and its PE ratio was 97.68. In 2026, Tesla's share price might reach almost $3,300 per share when multiplied by the estimated EPs. Purchase your existing Tesla stock now. How much will you earn if the price of Tesla hits this level by 2026? Please share your thoughts in the comment section below. If you haven't already, please remember to like, subscribe, and enable notifications so you don't miss our weekly new video posts. The price of Tesla stock could be influenced by a number of market factors. Based on its present production outputs and income throughout its many markets, Tesla is undoubtedly doing well. However, given that cars are being produced at its gigafactories, the automaker could need to do a little more to meet this price target. There are already 6 of these factories in the US, Germany, and China, and more are planned. The carmaker is still constructing factories all around the world in an effort to drastically boost output and change energy consumption. Tesla continues to invest in raising outputs throughout these plants despite production issues in some of them, particularly in its Shanghai facility, which faced major challenges in car deliveries. Musk has made hints that Tesla would consider constructing a second gigafactory in Canada. Although he had said it in jest, the Tesla CEO shared this insight earlier this year at the company's annual shareholder event. However, like many Tesla bulls, we do think the EV business can reach this milestone if it so chooses. However, Musk also stated earlier in August that it is likely that Tesla will construct 10 or 12 more gigafactories in the upcoming years. Musk made this declaration following the announcement that Tesla aims to build 20 million electrified cars by 2030. According to him, each of these plants will need to produce 1.5 to 2 million cars in order to meet this goal. This is undoubtedly a lofty goal, but it is doable because Elon Musk has already set a goal for the manufacturing of automobiles. Elon Musk, the CEO of Tesla, stated in 2014 that the business would create 500,000 cars by 2020, and it did. Tesla should be producing a sizable number of cars by 2026 if it is indeed aiming to reach the 20 million cars by 2030 target. Even though it would take 4 years for Tesla to achieve its 20 million car target, the company would have built a significant number of them by 2026, which might further boost the stock price. Tesla is dedicated to increasing production at its current gigafactories in addition to constructing new ones. Its Texas facility can now create 1,000 vehicles in a week, and its Shanghai plant recently achieved the milestone of generating 1 million automobiles. We do think it's simply baby steps, and the moment when Tesla becomes an almost unbeatable monster in the EV sector is not far off. Even though it hasn't yet reached the company's goal of 5,000 cars each week, as new businesses enter the market, it is evident that the EV industry is continuously growing. None of these automakers, however, can compete with Tesla given its market domination. In recent years, Tesla has achieved remarkable growth and profit margins, surpassing milestones that other automakers will need to work for years to achieve. With Tesla at the top of the charts and other EV firms well behind, it's easy to understand why they're doing well at the moment. Similarly, Tesla's automobile models are highly regarded in international EV markets. Additionally, Tesla has the best customer service, which adds intrigue to buying a Tesla. Tesla is far from losing its position as the world's top electric vehicle manufacturer. Regardless of the growing number of electric car manufacturers, it is likely to maintain its dominant position in the industry. It may be able to attain the predicted stock price value if Tesla can keep increasing production in its factories and get rid of delivery delays. Based on Tesla's historical performance, it is reasonable to assume that the firm will continue to grow over the next 4 years. It will repeat what it has done in the past. Additionally, keep in mind that this is the only revenue that Tesla will generate from its automobile company. Although we don't know much about its solar panels and batteries, if Tesla improves, there will be a significant increase in profits. Additionally, we did not account for Tesla's AI FSD and robot taxis, among other things that potentially generate massive profits for the car maker. Similarly, we utilized a growth rate of 50% for Tesla in this video, which is a little less than what is anticipated from the automaker given how rapidly it has grown in the past. Tesla has already accomplished this, and we believe it can do it once again or even more. Therefore, anticipate increased overall revenue and, consequently, a potentially even higher stock price projection by 2026. Nevertheless, given Tesla's present and possible future market, investors may be anticipating a sizable return on their capital, and we wouldn't be shocked if the anticipated stock value materialized much more quickly than anticipated. However, crossed